morning, traders. I'm Dennis Dick.
And I'm Joel L. Conant. Welcome to Pre-Market Info.
That 1450 level continues to hold. We bottomed overnight here again, 1450.75. That level's just huge. Alcoa has earnings tonight. Monsanto just reported. Yum warns, trading down a couple of points. McDonald's down a bit in sympathy. Sears holding CEO to step down. AT&T and Verizon, both ex-dividend today. Joel, this 1450 level holds again.
Well, Dennis, you say there's no such thing as a quadruple bottom.
There it is.
Yep, there we have Thursday, Friday's low, and Monday's low between 1450 and 1451 and a quarter. Hit 1450.75 in the pre-market. The world has to remain bullish as long as we hold 1450.
That number is just absolutely enormous. I mean, we've got defined support and kind of starting to get defined resistance here. Obviously, 1450 enormous. Gets up to 1461. 1463 area, that's been your resistance. So you can start doing a little bit of channeling maybe on the S&P. If it ever breaks below that 1450, I'm going to get nervous too, though.
Yeah, we had that little bit of a debate yesterday. We're looking for the next 20-point move in the index, and you've been, better over the course of time here, identifying the consolidation periods and then the next move higher. Where every time it consolidates, I think it's getting ready. The bottom's getting ready to fall out in the market. But we got two well-defined areas for our traders to focus on today.
Yeah, 1450 and 1463. Keep those numbers in mind if you're trading. Obviously, we start to break 1450, just not a lot below there. Moving on to news here, though, we do have Monsanto just reported earnings here, and they blew the number away, 62 cents against estimates of 36. Stock trading up almost 4 points here, 99.40, approaching the $100 psychological number in the pre-market. Closed at 95.94. What a move for Monsanto this morning.
Yeah, I got a print up here at 99.99, which
to the 100.
Yeah, busted through, just blew away the former 52-week high. If my memory serves me correctly, that's not quite an all-time high. Last time we were up at $100, Dennis, 100.69 back in October of 2008. Every time I look at a chart like this and we talk about it on the show, I always say, well, it's overdone, it's breaking out, I'm looking for it to pull back, and just like Amazon did yesterday, it runs me over. So I'll just use that $100 point. You got to figure there's going to be some stock for sale in the book, 95 through 99. It's more stock at 100. That's the number I'd focus on.
That's like a magnet for this stock now, probably that $100 level. So it wouldn't surprise me if they do try to take it through there, possibly trigger some or get some people caught in maybe a breakout. So I'd just be somewhat cautious. Just because it breaks over 100 doesn't mean it's going to just keep going. Like Amazon yesterday did keep going. It broke through out to obviously a new all-time high and just kept running. Amazon flat here this morning, but huge move for that one as well. Sears Holdings CEO stepping down here. The stock actually liking it. It's trading up almost $1, 43.75 after closing 42.92. Going to step down in early February.
Yeah, little Eddie Lampert's taking over the reins here. They do like the departure of this executive. Broke above resistance here that we had, kind of mild resistance in the 43.50 area. We have another reference point from December 21st of 2012. Back last year, 43.70 was a high. We're trading right there. Above there, it opens up for a buck to close to the $45 level. I mean, it's hard. I mean, just because an executive's leaving, I mean, that doesn't necessarily mean the company's going to do any better than it had. Remember when we were looking at this thing? Where was it? We were looking at perhaps buying some puts at it. Was and we missed it. Was that like around?
Well, I was up in the 80s actually, and I hated the stock up back then. But the cost to borrow the thing was upwards of like 40% a year. So I'm like, I can't really short the stock flat out and hold it for a swing trade. I mean, you can do it intraday, but it's hard to pick, the tops intraday. I would have loved to have been able to short it, but they handcuff you with these high borrow borrowing costs on a lot of these stocks. Everybody wants to borrow them, and they start to get up. Some of them get to ridiculous levels, and Sears Holdings was back then in early 2012. It was upwards of 40% to borrow it for the year. So I mean, just if you held that thing for 6 months, it's got to go down 20% for you to break even. So difficult when they make the borrowing rates that high to really be profitable on the short side. So despite having a very good call, I really didn't make any money on it. You could alternatively buy the puts, but the premium in the puts is really high too. So it's tricky, man. When the borrowing rates are that high and the premiums are high, it's tricky to make it on the short side.
Yeah, Dennis, we have a lot of experienced traders that listen to the show, but we also have some people that are new to the markets. Could you just real quickly go a little bit more detail about the borrowing costs?
So basically, when you borrow a stock, you have to obviously borrow from somebody else. If it's not easy to borrow, you have to get a locate, and those locates can actually be quite expensive. They're set by the brokerage, obviously, and they also obviously are set by the counterparty because they're getting paid as well. So if there's a big institution like Fidelity that's loaning their stock out, they want to get paid for loaning that stock out, and the brokerage wants a fee on top of that all. And if the stock's really hard to find, or if there's just not a lot of people willing to loan the stock, those borrowing rates can go quite high. Going back to the financial crisis, Citigroup's borrowing rate was 150%, believe it or not, back then. So basically, if the stock doesn't go down in 8 or 9 months to zero, you lose on the trade. So, and Groupon, when Groupon first came out, the borrowing rate was upwards of 100% as well. And we talked about that. I actually wrote an article on the site. It's under the education tab, talking about these high borrowing rates. If you're interested in that, just look under the education tab. It's a CFA article near the top on the borrowing rates, and I discuss this. And what it can do is actually create like toxic securities where you can't short the thing, but you don't want to buy it because it seems like Groupon had a ridiculous valuation, was at 20. I actually was citing that in the article. But if you borrow the thing, it's so high to borrow it, it just doesn't go down quick enough. So really, the longs lose and the shorts lose. So it's tricky, man, when they handcuff you with these high borrowing rates. So you want to be careful when you're just flat out borrowing a stock. Make sure that the borrowing rate when you're shorting the stock isn't too high. If you're trading intraday, it doesn't matter. But it's overnight where they figure this stuff out. So the borrowing rate doesn't matter at all intraday, but overnight it does. So keep that in mind when you're borrowing thinner stocks. Stocks that are thicker, like a Bank of America or something, cost next to nothing to borrow. But a stock like Groupon could still have a decent, premium to borrow the stock. Moving on here, we do have a couple other stocks moving in the news. Yum Brands warns a bit last night. They lowered guidance just slightly by a few cents, but they're punishing the stock. $65 is where it's trading this morning. It closed at 67.89.
Yeah, it looks like this stock has been coming out with some bad news on a couple occasions here. Or was that a special dividend when we dropped from over the $74
Yeah,
level?
it was. Yeah, I wish they would
Okay.
adjust the charts too. Some of your brokerages and their charting services
Okay.
do adjust the charts. Mine didn't either. I wish they would when they have the special dividends because it makes it look like it had a huge sell-off. It didn't really happen. The chart should really be up further because they got that special dividend.
Okay, well, here we are back trading right around the $65 level. You did have a cluster of lows between 64.56, or excuse me, 64.41 and 64.70. Looks like you had 5 or 6 lows in that areas. I would look as that as support. If it takes that out, the only reference point you would have on the downside is 63.07. Just to point out the coincidence here, it did hit 64 in the pre-market, getting a little reprieve here, trading over the $65 area, but still really like that 64.50 level, even though we got through it in the pre-market.
Nice number. McDonald's trading down a bit in sympathy here, just down 40 cents. Was down a bit lower in the after hours last night. I think it got down to about 90.20. 90.54 is where it's trading right now. So looking at it here, very light volume. Only 625 shares have traded. Closed at 90.91. So it's a bit weaker on the Yum lowered guidance.
Yeah, I mean, you can look at this this chart in a couple ways. If you look at it from the Dennis Dick tractor beam theory, they did clear out the sellers here, large sellers at 91. So it should be free to move higher to start to fill that gap area. On the other hand, you got the bad news coming off Yum. A lot of people are probably stuck in pair trades with that. Be looking to get rid of the Mickey D's. 91 still a very significant level. Looking at the pre-market activity, we got a spike down to the low 90s, 90.02. I would use that as support.
Boeing obviously was in the
Whew.
news yesterday. Stock, obviously, with that plane catching fire, was weak yesterday. It's continuing to be weak this morning. Have they found the cause for that fire, or what's the deal? Like the stock's down another buck 30 here.
I mean, that's something if if you own the stock or you're a passenger on any of those flights, it's certainly something that you don't want to hear
I
till
know. Nobody wants to hear
until
a
they get.
plane catching fire for no apparent
Yeah,
reason.
a good thing it wasn't in the air. That's all. That's all I have to say here. Let's look at yesterday's low, which we've already traded through 75.34. I would use that as resistance. It's filling the gap from that bogus move up at the beginning of the year. We're down in that area. Next major support level would be the $74 level. Just if you're trading this stock, just keep an eye on the ticker because it's going to be in play with all the
I
news.
think the $74. I think we might see that level today. We got another 75 cents here, but we've fallen off $2-3 since that's happened, or at least $2. I think it goes down to that 74 to at least test that low that we had on the 31st. Starts to take that out. Who knows? I mean, when fundamentals like this happen, you never know. But I just don't want to be long the stock. It just doesn't sound that good to me. I maybe for a little short-term trade, maybe gets a bounce off that 74, but I'd rather be on the short side than the long side, just from my own personal perspective on this one. Conagra announces a secondary offering, CAG. They're pricing it at 29.75. Stock traded down 29.75 last night. Traded down just slightly here, 29.96. We know those secondary offering prices often do act like a magnet as well, but they also often provide a floor for the stock. You've seen this in the AIG a couple of times when they were repricing at 32.5. Stock comes down and sometimes bounces off that level. So keep that 29.75 area in mind. It'll probably provide you some support at least off the hop.
Yeah, this is kind of an interesting place to do a secondary. I mean, the stock has had a monster run up. I think didn't they merge with somebody or take somebody over? Some potential synergies. Spiked up to the $31 level. 31.12, quite a ways away from that. I just don't have much to add to that except the secondary level at 29.75.
AT&T and Verizon are both ex-dividend today. Last time these stocks went ex-dividend, you can see it back here on the chart, it was in October, and the stock sold off pretty rapidly, actually. It opened at the high that day and sold straight off for 1 month, down 5 points. And I don't think that's going to happen here again. But we've had the classic run up into the ex-dividend date again on this one. We're obviously trading down, but the adjusted close is 34.94. That's the adjusted close for the 45 cent dividend. So keep that level in mind. Obviously, that's where people are breaking even. That took it home for the dividend. Call the whole area 35. Maybe gives you some resistance off the hop. Verizon, same story. Stock ran up really yesterday. Really ran strong in the afternoon, up into the ex-dividend date. The adjusted close on Verizon is 44.17.5. So call it 44.18. That's trading 44.22 right now. So it's right there, right at the adjusted close.
Yeah, I would use the adjusted close. I think is going to be very, very important level. I mean, for your real short-term dividend players that took it home overnight, obviously the scratch and getting the dividend is that 34.95 level. On the other hand, when you have a run-up like you did in T, people have been accumulating this stock,
Yep.
for the last 5, 6, 7 trading
Yep.
sessions, so they don't give a rat's, what, if they get out at 34.95,
They're up.
34.80,
They're up in it
whatever.
right
They're up big in this trade that people have been anticipating it for the last week. A lot of times what you see off these dividend plays is a real quick reaction. Open 34.95. If that thing drops real quick, 34.80, 34.85, get ready to sell it at that 34.95 level. On the other hand, if it holds, a lot of times these stocks can go ex-dividend and just have the pullback and run up. But looks like this got some room to get back on the downside.
Your favorite stock, Alcoa, reports tonight. Stock trading up 6 cents ahead of
Whew.
its earnings. 9.10's where it closed, trading at 9.16 right now. Yesterday's high 9.29. What do you think of Alcoa going into tonight's number?
Oh, I just can't wait for Klaus Kleinfeld to come on CNBC and tell us how great the economy is and how they're turning things around. Uh, no, I mean, this stock's had a big run up here, almost a stick since the beginning of the year. Double top at 928, 929. I'm sure that will be a relevant number again. We basically got double top, double bottom, 928, 929, and 910 has been the low 2 days in a row. Just keep an eye on those levels before, during, and after the numbers.
Big number I want to highlight on American Express, $60, absolutely enormous on this. I do have a trading position on it for full disclosure, but this has been the high of the move. It's traded and closed up there yesterday. Can it get enough momentum to take that level out here today, or does the $60 level hold?
The SPOO's just kind of meandering here in the low 14, mid 1450s. I think you need a big rally to get it through there. It's the highest this stock has traded for quite some time here. You did have a high back in April at 61.42, but unless the market really starts to run and it gets through that level, it's a toss up, but I will say one thing to you, Dennis. You're getting a running start into it. It closed at
Closed high into it,
59.86.
yeah.
Yeah, and you're up 11 cents on the day. You have your high freaks that won't be participating in the opening print. So, I would say if I had to flip a coin, it is going to take it out.
Facebook, big level on that one too. 29.78 was the 50% retracement of the
Yeah.
entire move from 42 down to that low that we had, which was down in the 18 area. We got yesterday to 29.79, so it kissed the 50% retracement of that whole entire move and then pulled back a little bit.
Yeah, you got to figure if it's come this far, it's going to test that 30 number, over the next couple days. Hasn't traded up there since it gapped down back in July. Focusing on yesterday's high, 29.79, that old 50% retracement, from the all-time high, which we're going with 42.05, I guess, not the 45 bogus print when Nasdaq was having problems there. But for folks that when we're talking about 50% retracement from that 42.05 down to the 17.55, halfway back, critical level. We'll see if it can test it again today.
It was a pretty wild ride for Apple shareholders yesterday. Joel, the stock opened fairly weak, went down, bounced off 515 and rallied 14 points in the next hour up to 529, then started peeling back, so got down to 521. Kind of closed okay, though. I think keep an eye on this 520 level. I want to see it hold above that now. That seems to be where you found some buyers yesterday. Hopefully those buyers are still there today if the stock continues to hold that level. I'd love to see it get above 530. That's really what I want to see, is get above yesterday's high, 529. What was the high yesterday? You got it on there?
529.30.
529.30. Call a whole level 530. That's where I want to see the stock start to get above if I'm really going to start to possibly get in the bullish camp here. It's hard to say. You got this trend line that I drew, this ugly trend line that it broke to the upside. We came back yesterday and tested the upward or the bottom end of that trend line now, and so from the breakout, so if that holds, it stays above that old trend line, and possibly you could be seeing a bullish signal here if the thing starts to get above 530.
Yeah, this thing has been a little bit tricky. I was looking at it off the open yesterday, and obviously it was weak. And I'm looking at my numbers, which I think you've all figured out by now. I'd like to really focus on former daily highs and lows and closes and whatnot. And I was looking, it's not going to get to 509 today. There just wasn't that kind of negativity in the market to to push it down to that level, and of course the 501 level. So 515.20, a kind of a round number or close to a round number held it. You have to consider that as major support. People are, trying to scale out of shorts and scale back into longs in here and just picking, levels ahead of the major levels. So as long as the 500 holds, you got to believe Apple, still has a chance to, go back up. But think about this, Dennis. If Apple was at 705, its all-time high, where the heck would the SPOOs
Oh
be?
yeah, because they drove the SPOOs. I mean, the SPOOs have been driven now by the financials. There's no
Yep.
doubt that basically Apple handed over the reins to the financials there, looking back 3 months ago when all your financials started taking off, and that's really been the driver to keep us going. I mean, if Apple starts to turn it around, then the market really starts to look good. So it's really Apple could be kind of like the bogey here on whether this market's going to end up going higher or not. But like you said, the 1450 level for you traders, short-term traders especially, that's the critical level we need to keep a focus on, and the market needs to stay above that level. That's our show for today, guys. Have a great trading session. We'll be back with you tomorrow.